What I wanted to talk about is the G20 meeting briefly. We got the ceasefire for the next 90 days. So nobody's going to do anything. The Trump administration is not going to raise taxes from 10 to 25% on additional $200 billion worth of goods and services. That's not going to happen. According to the Trump administration, tariffs are coming down for automobiles, and that helps mostly actually the foreign manufacturers, companies like Volkswagen, BMW, because they manufacture in the US and then they sell into the Chinese market. Mathematically, I think it's not a question of if, but when. We will have a deal with the Chinese. It's going to happen. I wanted to speak about GM for a second because it's positive for the automakers. But GM, again, it's a unique situation because this is one of the cheapest companies on Wall Street, selling at 6 times earnings. Not to mention the dividends they are paying north of 4%, not to mention their solid balance sheet. And for me, more importantly than anything else, they still own inside GM Cruise. That is their autonomous driving unit. Second to the number one in the industry right now, Waymo, that is presented by Google. Based on the recent money that went into the deal by SoftBank and Honda, that unit is valued at about $14 billion. GM owns about 75% of it, which puts their stake at about $10 billion, which translates to about $8 a share. And that $8 a share, I don't think is in the stock right now. Last week, they appointed a new CEO to run that unit, which to me might be an indication that they are getting ready to spin off that unit. Another name I wanted to talk about briefly is about Microsoft, because Microsoft last week took the lead from Apple as the number one largest company in the world, about $850 billion in market cap. And they did that with 23 times earnings, as opposed to Apple that sells at about 13 times earnings. Net of cash, Apple sells maybe at 9 to 10 times earnings. And one of the reasons for that is their cloud-based business. They were smart enough early on in 2016 to shift into cloud-based businesses, and they captured within a year to 2 years 13% market share. The largest company in that space is Amazon with 50+% market share. But the difference between Microsoft and Amazon is that their Azure business is growing at north of 70% per year, as opposed to Amazon, that I think is growing half that growth rate. And they also made some strategically major shifts. So now you can actually have Office 365 on iPad and other mobile devices. And the company that was down since 1999, about 40%, started recovering all that loss in market cap.
Cryptocurrency is still big in the conversation. However, when you get down to the bottom line with people in conversations, they all admit that unless the U.S. federal system will accept it into the banks, it's going to be a long haul to convert to cash.
I wanted to touch base on some emerging markets, and the U.S. was the first country in the world to really come out of it, and a lot of people around the world were looking for safety. And the U.S. has a population of about 325 million people, and the worldwide population is 7.7 billion. Of the world's market cap is in the U.S. The next two economies, China and Japan, are at about 7.5. So there's a significant disparity between the U.S. and the next two biggest economies. Some staggering numbers that I found are 3 billion people in the world are living on less than $2.50 a day. 80% of the world's population is living on less than $10 a day. But as these economies are starting to develop and people are starting to make more money, right now, for example, minimum wage in China is about $320 a month, and you have countries like Mexico where it's as low as $90 a month. As each of these markets with billions and billions of people out there, as the people are starting to make more money, there's going to be a significant amount of market cap and growth in industry in each one of these developing nations.
Diversification and asset allocation and putting money outside of the U.S. in emerging markets, some of the markets you mentioned, this is definitely the right way to do it, in particular knowing that most of the money in the past 10 years went to the U.S. and that discrepancy just got wider. And the valuations in these countries are substantially below the valuations in the U.S. If the U.S. sells at 15 times earnings, these markets, some of them sell at 9 to 11 times earnings, including Europe.
A little bit more on GM. I saw a report that said that they anticipate that these plant closures are going to boost free cash flow by about $6 billion annually by the end of 2020. They are a strong number two to Google's Waymo. The president didn't look too kindly on them closing those North American plants and threatened to cut their subsidies. So I saw something, I did a little checking. The subsidies that the IRS gives for electronic vehicles phases out once the manufacturer hits over 200,000 units produced, and GM is expected to hit that by the end of this year. So those subsidies were going to at least start getting phased out by the end of the year and starting in next year anyway, if they didn't go away.
Hello everybody, and thank you again for watching our videos. I'm Amit Stavinsky, the Managing Director of Tamar Securities and its affiliates, 911 Financial Services and Firefighters United. If you like the content, please be sure to sign up to our YouTube channel. Also, you can find us by clicking on our website at tamarsecurities.com. You can call us directly to our main offices in Woodland Hills, California at 818-914-7461. The highlight of the week is that investors, such as investors in real estate, should pay utmost attention to asset allocation. In real estate, we say the most important item for investments is location, location, location. With the investment portfolios, the most important item in our view is asset allocation, asset allocation, asset allocation. In other words, what percentage of your total portfolio invested in the market should be put to work in bonds, cash, domestic equities, international equities, emerging markets. Please pay attention to that.